Aloha, everyone. It was already ridiculous heading into this final week into 2017, but we're getting asinine at this point as I continue to receive over a handful of new long positions every day, and there just isn't enough sell signals or stops being triggered to replace the new long positions. So yesterday, what I did not mention is that the only amount of capital I could get invested in any new long position was 0.5% of my account capital. Now, I use my total account capital based on the last time the market had a big downtrend. And if you don't know when that was back all the way in 2016. So what my total in my account was here is the capital asset allocation model I was using all throughout here. So with that being said, my new account total balance is much higher than what it was, but I'm still using, so if 1% of my account capital is 4,000, that was being, a little loose with it. It's right around 5,500 now, give or take. So the thing is that I'm still operating with the total dollar amounts from these lows here, since we just have not had a bigger correction since. So with that being said, the only amount of capital I was able to put to work today in all those long positions was 0.5%. Well, it's even less for Thursday. I have a lot of new long positions, 5 new quality, 2 add signals, and all I can put into them is 0.36%. I can't put any more or any less. So anywhere from $1,200 to about $1,800, that's what I'm putting into each of these positions. Remember, it costs me $1 to get in. If both of my stops hit, $2 to get out, for a round trip trade of $3. $2 if it's just one long with one stop. But the bottom line is I'm maxed out. I don't have any money to put to work. So these new long positions are going to get the least amount of capital possibly allocated that I've ever been able to allocate for a full round of signals. And with that being said, also, I want everybody to see the stocks I am long. I am now tracking 268 names. That means that I am either long these stocks or still tracking them on the end-of-day basis for the site. Either I didn't get an initial position because it gapped and ran without me, and or it shook me out of my entire position and has continued higher, not triggering an end-of-day sell signal. So to be around 270 long positions and then have these tonight, absolutely incredible. It's not the most explosive market, obviously, and that's because the VIX is down here by 10. If the VIX was at 50, I can only imagine the gains if I had these kind of chart patterns. But with all that said in mind, let's get to the new long positions. The first one is canceling perfect speculator quality. You're going to all need to go to the new positions page and look at the recommended limit order and stop levels. I just want to show you the chart pattern and just basically tell you what I see. With FSLR, oh God, what have I just done there? With FSLR, I love that it's basically bouncing off strong support. That's coinciding with the 20-day moving average right here, that magenta line. So I like that candle over candle print. So with FSLR, with it being canceling and perfect speculator quality, I want to get long. You should technically be using 4% of your account capital into this position, but I like the BOP, all the green BOP in it. I like the volume bars, the low volume as it consolidates. Got a candle over candle, engulfing candle over candle. So it looks like FSLR wants to resume its uptrend. I, of course, had a long signal here. I was completely shaken out here. So it's almost like a buyback new long signal. But FSLR is the highest quality new long position without a doubt. Then there's SGH. SGH is canned slim quality and also a recent IPO. So it gets more weight because of that. Go check out their earnings per share and sales growth in the most recent quarter and look at what the estimates are for the upcoming year. Quite an explosive company. The gap up is holding. Lower volume pullback the previous session. Candle over candle with the BOP confirmation and volume confirmation. SGH is an automatic long signal, but it has to be halved because it is extended from the 10 and 20-day moving average. So keep that in mind. PFSI, this showed up in 2 volume surge scans, and one of the scans that it showed up in only had 8 stocks PFSI was one of them. It was confirmed in my price volume BOP surge scan, and it was in my green BOP for 20-day scan and my max green BOP for 5-day scan. So PFSI is technically a 4% position, but it's a little extended from the 50-day moving average. Well, a lot extended from the 50-day moving average. So invest accordingly. Obey the limits and stops that I posted on the website. FFIN, this one comes from my price volume BOP scan, pocket pivot point signal, heavier volume, BOP confirmation, higher green BOP than the previous levels, right off the 50-day moving average. First cut loss here, final cut loss here. You could even do thirds, 1, 2, 3 on this one. Just obey my limit orders and stops if you take FFIN. This was only in the price volume BOP scan. It's not CANSOM quality, wasn't confirmed anywhere else. And then ABG, same thing. Love the volume surge, the BOP confirmation, highest green BOP in the past few sessions, bouncing right off strong support near the 50-day moving average. Go long ABG, limit order at the high of the day, and then you can have a first cut loss here and your final cut loss right here. So very limited risk in it. But ABG, FFIN, these are two lower risk overall long positions. FSLR's a little bit riskier because look how extended it is from the 50 200-day moving average. SGH is riskier because it's not only extended from the 50, but it's also extended from the 10 and 20-day moving average. PFSI is risky because it's extended from the 50-day moving average. So FFIN is a more safer long position, and so is ABG. They're both of lower quality. The safest long signal, ad signal, is XHE. Obviously, it's an ETF. Isn't going to move much. If it does move, you could have one cut loss here at this low and then a final cut loss where the final green BOP is here. So I would have one stop here and a final stop here, but this is a pretty decent ad signal for XHE, extremely safe. And then the other ad signal is a much higher quality stock, WUBA, CANSOM quality, perfect speculator quality, powerful Chinese growth stock. But while it is safe, though, it is the one long position where we don't have BOP confirmation. BOP is going the wrong way, volume is well below average, but you got a short-term series of higher lows, coiling in this pennant formation right off the 50-day moving average. Nice engulfing pattern over the past few days of price action. And like I said, already with that green BOP is nice. Now, if BOP would have increased today, I could say that I really like this chart. As it is, I just like it. But overall, some pretty high quality signals. SGH, WUBA, I mean, these are all really high quality names. FSLR, XHE is safe. PFSI was just in 4 different scans. Love the volume surge. No real news today either. FFIN safe. ABG is safe, and that's why they're new long positions. 1, 2, 3, 4, 5, 6, 7. So we've gone over the long positions. So let's go over the sell positions. TPL is triggering a 20% RSI 14 extremely overbought profit taking signal. It triggered one yesterday, but fresh breakouts are not sell signals. So TPL broke out on the 22nd, followed through on the 23rd, but here following the session, or on the 26th, but here following Wednesday session, you have an intraday reversal off the intraday highs, closing in the lower end of the entire intraday price range on the heaviest volume of the most recent price action. So with that in mind, and with the RSI over 80, TPL is now triggering a 20% profit taking signal. So if you bought TPL back here, you definitely need to sell 20%, lock in 56% gains on this 20% of your position. And then KOL. KOL is a stock I did not get long. This was a new long signal here. That's the new long signal. Gapped up, so I didn't get my limits filled. The new limit becomes the low of day, 1520. The next day, the low day was 1521, never touching 1520. It's now ran without me. Well, once again, highest move of the entire uptrend since going long. Big intraday reversal off the highs on that heaviest volume while it's lost green BOP along the way up. With RSI over 80, that's a 20% profit taking signal. So you want to lock in 6% of KOL. Also on the speculative side, if you're long CIRC and you have not taken any profits, CIRC is producing a 20% profit taking signal, locking in 150% gains in less than a month. Then there's NEOT. I got it hit one of my profit limits today. It was this high day right here, 199. So I'm out of half of my position. But if you're not, NEOT is now up 57% since I went long. You need to lock in 20%. And then also TESS is a 20% sell signal on the spec side. I will be locking in 20% at the market, 50% gain, slightly over 1 month time frame. So as you can see, some juicy returns on all these stocks that are triggering overbought RSI sell signals, minus coal, but because that's an ETF. 50% sell signals. BBX is closing below the 50-day moving average on above average volume. It still has green bop, so I'm keeping my other stops on the books. But 50% of my position goes below to this day's low day. Then I have, so let's say there's 100 shares. 100 shares. 50 goes here, and then the next 50 gets split up for now 3 ways. A third here, a third here, and a third here. BBX closes below this low a day right here on heavier volume, especially if it loses green bop. This stop and this stop will be removed, and there will just be one final stop. But for now, 50% here, then a third remaining here, a third remaining here, and a third remaining here. This gets violated. Those 3 remaining stops all get moved to one final stop on BBX. But that's a small loss. I think it was a 2% loss since the initial long position. Yep, we round up, so 2% loss for BBX. FBNC closing below the 50-day moving average, and its signal date's low a day once again on above average volume. But once again, another bullish intraday move from the open. If this stock here opens at 35.49 and closes at 34.97, it's a 100% sell signal, even with it still having green bop. But since there's an intraday reversal and the open was the low, I got knocked out of another half at the open this morning. So now if I have 20 shares left, 10 go here and 10 is still right here. It violates this low in the next coming days without violating this low and loses green bop. This stop will be raised to whatever the next new low is. But with FBNC, we're now looking at a 4% loss on this one. And then EGOV, another 50% sell signal, was knocked out of another third whenever it moved below this low a day right here. But on an end-of-day basis, it's another 50% sell signal. But it's not a full sell signal yet because it's pulling back on low volume and max green bop, which is the scenario that I keep telling you, that as long as the stock does that, I'll play all the stop levels. So for now, EGOV, I had 60 shares remaining. I already checked my stops. 20 goes here, 20 goes there, 20 goes there, 20, 40, 60 for EGOV. This video is going much later than I thought it would. And that's a 6% loss for EGOV. The 100% sell signals, EFZ hedge signal from Wednesday or Tuesday, immediate failure. That's a 100% sell signal, but you know how I do it. 50, 50, 50, 50, 50 each successive low until I have no more shares. I don't have a lot of EFZ anyway, so it doesn't matter. But on an end-of-day basis, EFZ is done. I will no longer be tracking it on the website. And then the other 100% sell signal, PDFS, failed the low here, the green bop low. So I'm not using these lows because there's no green bop. I went long here on this candle, started to move higher here, so immediately split my one and only stop into 2. It violated 1, split it into 2 again, violated another one yesterday, but on an end-of-day basis, there is no sell signal. But finally today, closing at 1562, that's below 1568. That's a 100% sell signal for a damaging 4% loss, and that's how you do it. You saw all those big gains on all those 20% RSI 14 extremely overbought profit-taking signals. Compare those gains to the 2% loss, the 4% loss, the 6% loss, the 1% loss in EFZ, and the 4% loss in PDFS. Small gains, small wins, large wins, no large losses. Rinse and repeat. All right, I'll see you in the chat room, everyone.